Hello and welcome back to another edition of Opening Range Mastery video training for the Opening Range Success Formula and Day Trading with Hot Scans. In today's video, I'm going to look at yesterday's opening range action around the 4 market watch charts. More so than, I won't say ever, but then in recent history, we're seeing a lot of days where the divergences of the placement of the market relative to its opening range is dramatic. So what I'm talking about is the green line here is the 30-minute opening range. The red line is the 30-minute opening range low on each one of these charts. I'm just going to focus on the 30 minutes for right now. And if you look at the SPYs upper left, they're trading at the top of the opening range. The Dow trading at the top of the opening range. You know, this is kind of after the morning. The Qs, top of the range. And the IWMs are the laggard down here at the bottom of the opening range. So that divergence is a huge heads up and often a big opportunity. It often means that the market's likely to move if this divergence can right itself. But until it does, you want to be careful because we're really set up nicely at these junctures, kind of going into the 1 o'clock time, for the market to either roll over and come off from its highs in 3 out of the 4, or for this consolidation at the highs to break out. And regardless of what happens there, you're going to want to go look at the stocks or even trade the individual ETF that makes sense for the trade for the afternoon. So what are you going to look for? Well, first of all, I've got the moving averages here, the 10, 20, 50 that you know I like to look at. I like to look at the 4918 as well. In this chart, we've got 10, 20, 50. So I've got them here nice and big because there's an important pattern. I've talked about this before in past videos, but it really stands out here today. And that pattern is, when do all the moving averages become stacked and sloped? When do at least 2 of them become stacked and sloped? And when is the price going in the same direction as the moving averages? All right, so let's just take a look at it, the setup from that perspective. And I could pick any one of these charts, but I'll start here with the SPYs. So SPYs, they open lower. We all open lower. All the indexes open lower, rather significantly lower relative to price action. And then it starts moving back up. But you can see the SPYs are fighting their moving average until they get up and consolidate around the high of the opening range, fall back under the opening range and the moving averages, and then they're just kind of consolidating here until they can break this level. They really haven't made that new swing high with positive moving averages, and they're also going against the longer term moving average. All right, that 50 on the 5-minute. This same analysis is basically true of the other 3 and even the 4, with the exception of the 4th being it's not near the high of the day. So if you're trading at the high of the opening range and you've got your moving averages working against you, you're in a much better spot when the moving averages are finally going your way. And that's what happened when the markets broke out to the upside at 1 o'clock. So, or around 1 o'clock, after 1 o'clock. So my point here is that the attempt to move higher here still had this headwind of the higher time frame moving average, right? That was true in all the markets. When it finally was above all the moving averages was when it decided to move higher. But I don't think that that's the only reason that it decided to move higher. Okay? I think just as much of a key, and this doesn't have anything to do with the moving averages. Just as much of a key to the break to the upside, and I said this in the trading room, was the fact that the IWMs had an opening range reversal pattern. Okay, so if the markets were trying to decide which way they were going to go, up or down, what became a catalyst for up, or confidence for moving up, was that IWMs finally put in a good break above the opening range after making several attempts to be below it. Okay, so the key here was that the weak index told you that it had tried to go lower and it was going to rally, or at least had enough energy to stop going lower. Now, it doesn't necessarily mean that we know it's going to then break out to the upside and go on for a big run, but we don't need that, and you'll hear me say that in a lot of videos, in a lot of coaching. One of the great things about trading with the opening range is that you can have a good setup where all you have to do is get back to the high of the day and it's a good trade. And we look at the market watch, or should look at the market watch, the same way. I was looking at the IWMs down in here for this period, as you know from my conversation in the room, not because I wanted to buy the IWMs, but because I was looking at other stocks. I was looking at Goog, I was looking at Apple, I was looking at I was looking at Dollar Tree, a bunch of strong stocks, but I didn't really want to get too involved in them if the IWMs were going to pull the market down. So all I needed was IWMs to have a good opening range reversal, travel up to the high of the day, and that would be what the market needed to, well, for the Qs to really have a nice run and for a number of stocks to have a nice run. Now let's come back to the moving averages and just take a look at the pattern in the moving averages. For the first time, as the IWMs were trying to reject their opening range low, they broke above the 10 and the 20, and the 10 had positive slope. Let me blow this up. All right. Now I'll also, as I said, I'll look at a 4918, and 4918 in this case was a little more obvious from stack and slope, but it works here too. Opening range breakdown, opening range reversal, couldn't get back over the 10 and the 20. Okay, not surprising based on the stack and the slope. Same reason that the other markets were struggling at their highs, this was struggling to get off its lows. Test the lows again. Can't get back through that zone. Okay, so even though we've got a reversal and everything looking pretty good, it's still, the market's still not ready. Finally, another test. Here's your good swing. You take out that swing, and now for the first time you've got good slope and you're above both moving averages. All right. That's the key. Now, it didn't hurt. In fact, it helped quite a bit to see that there was good volume coming in. It also helped quite a bit to see that we were taking out a trend line from basically the high of the day. All right, so all those things together add up to what you want to be looking for in these, in this case, hugely divergent situation. All right, hugely divergent situation. So you want to look at the strong one, you want to look at the weakest one. If it's 3 against 1, you don't want to assume that that one is irrelevant. And in this case today, it was I think a big key to having the confidence of knowing that this breakout wasn't going to fake you out, on top of the fact, as I described, you had the moving averages finally shaping up. So, hope that helps. Keep your eye on the market watch charts. These patterns happen all the time, and I'll see you in the next video.